As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Aniruddha Joshi from ICICI Securities Limited. Thank you, and over to you, Mr. Joshi.
Yeah, thanks, Nirav. On behalf of ICICI Securities, we welcome you all to Q1FY23 results conference call of Kansai Nerolac Paints Limited. From the management side, we have with us today Mr. Anuj Jain, Managing Director, Mr. Prashant Pai, Director Finance, and Mr. Jason Gonsalves, Director Corporate Planning, IT and Materials. Now I hand over the call to the management for the initial comments on the quarterly performance, and then we will open the floor for question and answers. Thanks, and over to you, sir.
Thank you so much. Good morning and namaskar to everyone. Greetings for good days. Thanks for joining this call of Kansai Nerolac for Q1 of financial year 22-23. As you would have seen during first quarter, we recorded top line growth of 47.1%. Industrial growth is slightly higher than decorative growth. Inflationary trend continued with 7% further inflation what we have seen in Q1. And in Q1 we have taken approximately 2% price increase. So just to give you some update, last conference we spoke about what actions we are doing or taking in industrial and decorative. So I'm just taking a privilege to give you update on those points as of now, that how we progress, what actions we have taken, where we are. So in industrial we said that last year also we had an increase in market share and that trend continues. And our challenge is basically to ensure better margins. And therefore, in addition to the efforts for price increase, like last year we have taken approximately 18% price increase. What actions we are doing, because that increase was not sufficient to mitigate the inflation, because inflation was very high. So what other actions we are taking? So we have been extending technologically superior product. Some product we mentioned last time, like monocoats, medium to high solids. And in addition, now we have expanded our range of tin-free and energy-efficient products. These are very high technology products, which really helps customer in terms of their capex goes down and energy efficient, so therefore the consumption of the energy goes down. So it is environment friendly, and also it helps in terms of reducing the cost and increasing the productivity of the customer front. And so we are expanding, and our salience has gone up in the Q1 because we are trying that how much we can shift to these products where there is advantage and maybe slightly the margin is also better. In performance coatings, where the again the margins were very, very low, and we said last time that we are increasing our focus towards high technology products where the margins are better. So what we have done in the first quarter is that there were a lot of low-end business where the margins were not there, hardly margin. So we exited approximately 10% of the business we exited, and we shifted our focus to the premium item, technology items in high performance coating, and where the salience has gone up in the first quarter. In coil coatings again, there have been a lot of margin pressures, and we were actually selling at a very, very low margin or hardly any margin. So there also we said that we'll move towards higher margin technology products and appliance business, because we were only in the sheet business, so we were saying that appliance business. So there, in fact, we have left almost 30% of our business, which was not profitable. And in appliance and the high technology, we started getting the approvals. And our salience in the first quarter has gone up from 3% to almost 10% in coil coating. In powder coating also, where we have a good market share, we are market leader. But in the premium, our market share is less. So we said that we'll increase our salience in the premium. So in the first quarter, our salience has gone up by 2%. It is not in line with what we have targeted, but still the trend is upward. So this is in case of industrial. In decorative, last time we discussed that what we are doing. The one action was related to a new brand expression, which was Paint Plus, where we said that we'll be launching differentiated products. So in the first quarter, mica marble stretch and sheen, we expanded. So we launched it in the fourth quarter of last year, but we expanded in the market. Now it is available all India. We introduced Nerolac Impression Kashmir in the first quarter, and polyurethane enamel also was introduced. Second point, we said we'll add more and more products every quarter in premium and super premium category. And we'll increase the because our market share is better relatively in economy and popular category, but we are weak in premium. So we said within our network, because we have a strength of network and we have a relationship with our network. So from our network, we'll attempt to increase our sale. So with the introduction of these new products in last 2 quarters, our distribution growth for the super premium category is more than 50% in the Q1, and salience also has gone up. In terms of communication, we were saying that we'll increase communication through advertising and digital marketing focus, and we'll focus on Paint Plus, which is the differentiation, and Japanese technology and jingle, which is very popular. And in terms of our share of voice, we'll keep it around 15% approximately, and we'll participate in maybe cricket again. So in the first quarter, we introduced campaign on Paint Plus with Japanese technology and jingle. So that has been on air in the first quarter, and our share of voice in the first quarter was little higher than 15%. Another point was augmenting the market development structure to generate leads from sites and influencers. So in first quarter, we scaled up field team. Most of the time has gone into recruitment, but we have scaled up. Actually, we have doubled our team, and also the support system. And we also started digital marketing program for lead generation towards the end of Q1. The other point was that we want to do some good influencer program with acceptance of Pragati app, which we introduced for painters, that offers instant benefit, which is the fastest in the industry. So in the first quarter, we have seen a higher double-digit growth in the increase in the participation of painters, but we still have a gap in terms of getting share of wallet from the painter. But participation has increased. We also wanted to start tracking the secondary sale from the dealer counter. We started, but we'll have to bring it to a meaningful conclusion. In distribution, we had increased our team to open the direct distribution, dedicated team for opening the distribution, and some new distribution models. So in first quarter, our distribution growth is again in high double digit, and we have put 50 preferred counters. So these are like a kind of experienced stores, but with the existing dealers. So 50 counters are in place. We were weak in institutional business, project business, and last 2-3 years, this business was growing at the faster rate. So we said that we'll focus on institutional business by increasing the reach. So we expanded our reach in the metros and tier 1 towns, and expanded our team there. And in the Q1, we doubled our business in the project institutional business. The next part was new business, which includes construction chemical, woods, mainly in our case, because adhesives we do through Nerolac, which is our subsidiary, so joint venture and subsidiary. And we said that we want to achieve a salience of greater than 5%. Industry salience is higher, but since we started late, so we said first milestone is that we should achieve 5%. In the Q1, we have touched the salience of 5%, and obviously our first attempt was not to create any differentiation here, but since we started late, let us match the range of the market and see that how much we can sell to our existing counters. So as of now, approximately 30% of our existing counters have started selling our construction chemical. So obviously we have to go forward, but as of now, this is the status. In this new businesses, it may be very difficult to compare, with the other companies or the industry, because a lot of new business are getting added. For example, in construction chemical, there is a business called membrane business, which is also quite a good business. But we have not got into this business because when we started this, we evaluated entire range and we found that the margins are very low, and we did not find it very futuristic product, so we did not get into it. There are admixtures, which is also a part of construction chemicals. In our industry, many companies have started admixtures also. As of now, we have not got into it because our first task was that the range which is related to retail. Our first target is that how do we get our existing counters to sell our construction chemicals. That was the focus. So we can say that today whatever range is available in the market, because every quarter the products are being added, our matching range is around 70%. And we don't have any plan to go to 100%. We'll remain in 70 to 80%. When it comes to adhesives, it's a part of our JV, which is Nerolac. And in the first quarter, there the growth was more than 100%. But in our standalone result, it will not be reflecting. And so that's the status on the new businesses. We have a complete range of economy products for Soldier and Nerolac, and there were certain gaps in the product range which we have completed. Water-based range is completed. There are certain products in the economy category in animals where the margins are very low, and therefore, as of now, we have decided not to get into it. But when we have completed our range of water-based, we have found that there is some cannibalization happening, because when you introduce the economy range of products, partly they eat the sale of the the higher range of products, and therefore there is some drop in ASP. We also said that we'll venture into services with 5 days painting proposition. So in the Q1, we started under the name of Next Generation Painting Services. In 6 cities we have launched with the proposition of 5 days and dust free. This was launched in 6 cities. As of now, just a start, and going forward then we'll expand to other cities. We have a plan to expand it to the other cities also. So this is the update on what I said during the last conference. What else we did in the Q1, after I took over from 1st of April, we focused a lot on the employee engagement, the culture of collaboration. A lot of activities have been done. We introduced in our company Life at Nerolac, where when people take pressure, they also enjoy the work, and a lot of collaboration activities we are doing. Take care of the well-being, because last 2-3 years the situation has been tough, COVID situation, and people have gone through a lot of mental agony. So we have focused on the well-being and introduced some well-being apps and initiatives. We have done. This year we had given some extra entries to all set of employees to combat inflation. Some extra entries were given. And we also worked on developing the digital training plan for all managers. Earlier we used to do it on the selective basis, but to upskill and rescale, we had decided to go for all managers. Also, we worked on the talent identification, because as the industry situation is changing, some kind of new talent is required. So we re-looked at the entire exercise of talent definition, identification. We went through the assessment of the talent to the outside agencies, and we made our action plan for next few years. We also focused on innovation in the Q1, and we had an innovation day, and a lot of ideas have been generated in the area of product, business model, services, and we have selected double-digit quite a good ideas which we are going to take ahead for the implementation in the coming time. We also spent a lot of time in terms of meeting. Personally, I spent time in terms of meeting customers in industrial, automotive, performance coating, and the decorative market, just to understand that how the changes are happening. Also, we spent time with the vendors on one-to-one meeting, and I was privileged to meet many of you on one-to-one basis in the Q1. I think we had more than 20 meetings with the investors and analysts also. In terms of this ESG, our company has done very well in last 2 years, but when it comes to the carbon emission, we were looking at scope 1 and scope 2, but we have initiated the exercise of doing the inventarization of the scope 3 and putting the science-based target for carbon emission, and also framing TCFD framework for us, because in our parent company Japan it is mandatory, in India it is not mandatory, but from the self-regulation point of view, this framework also we worked upon. In line with our plan, we have finalized our 3-year strategy for decorative and industrial. That is also completed. The execution plan is made, and in line of that, we re-looked at our capacity plan and the requirement, and accordingly the actions are initiated. So these are few other things which we did in Q1. There are few things which are not working in our favor as of now. So one is putty, where there have been no price increase in last 1.5 years. Recently there was one price increase. There were higher discounts in the market. Margins are very low. So we still continued our restricted approach in putty. Local versus upcountry means the tier 1 metro, tier 1 versus tier 2, tier 3, tier 4. So our contribution of sale is more from the lower tier towns, and if we compare with the industry from metro and tier 1, our salience is low, but the market growth is higher in metro and tier 1. So just for example, even if we take the matching growth, we have a disadvantage of lower growth because our salience is lower. Similarly, in our business mix, the project which is going at a rapid rate. So as I said, that first quarter at least we are able to match the market growth a little better. But again, our salience is just single digit, lower single digit. While for the market it is double digit and maybe little higher double digit. So even if we, for example, if I am 5%, grow by 100%, I'll get 5%. If the market is 12%, grow by 100%, they'll get 12%. So that salience difference is also there. And also in the new businesses, salience, that even if your growth is okay, but salience difference would be there, and that will continue for some time. So this is something which we feel it is not working in our favor. And internally, whatever actions we have taken, I think I realize that what we need to improve at our end is the speed to scale up, because some of the things which we have done, as of now, the indicators are in our right direction. So we need to improve in terms of speed to scale up and also sustaining momentum of some of the launches, innovations, what we are doing. This is internally what we feel that we need to scale it up. In terms of profit financials, you all have seen the result. The profit after tax was up by 37%. So this is the initial commentary from my side. Thanks a lot for your patience hearing. And now I invite the questions.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. The first question is from the line of Dhruv from Edelweiss. Please go ahead.
Hello, sir.
Dhruv,
Hello.
you can't hear you.
Hello.
Yes.
Can you hear me?
Yes,
Yeah.
yes.
Just a couple of questions. One is on the revenue mix. Can you take us through the mix which we have seen historically between industrial and decorative, and within industrial, what has been the mix of auto and non-auto? And what is the current mix, and where do you see 3 years ahead, given the growth uptick you see in the auto sector, basically? That's my first question.
Okay. So mix is generally like, we have been saying around 55-45, 55 for decorative and 45 for auto. And within that, it is about 70-30, auto and non-auto. And going forward 3 years, obviously our, plan is, but, today the opportunity is there in both the markets, decorative and industrial. So though the intention is that it goes in favor of decorative, the salience should continue to go up. But it depends that how market behave in next 3 years time, because since we are strong in industrial part also, if there is opportunity available, we would not like to lose up on that.
Thanks. And second is, can you take us through the market share in both the segments?
See, market share is very difficult, because generally what happens is that it depends that how many companies you consider. But in decorative, if we take only the listed companies, the market share is around 9 to 10%. And in automotive, we have a market share in excess of 50%. For the non-auto, it's very difficult because there are so many companies and there are so many segments. So segment by segment, you have to look at. So therefore, there it is very difficult to get into the market share.
No, that I understand. Thanks. This is all.
Thank you.
Thank you. The next question is from the line of Shirish Pardeshi from Centrum Broking. Please go ahead.
Yeah, hi Anuj, Prashant.
Hi.
Good morning. Thanks for the opportunity.
Good morning.
Just two questions. Did you spell out what is the volume growth in the decorative segment in the beginning? I mean, I missed that number.
No, I didn't spell out. So overall volume growth was higher double digit.
So when you say 18%, you have taken price increases. So it should be in the range of about 20 odd to 22%.
Yeah, more than 20% you can say.
Okay, that's really helpful. Second, you mentioned that you have taken 2% price increase, and you mentioned that the inflation is in the highs of 8% in the quarter.
7%. Yes.
That's correct?
Yeah, 7% inflation in the quarter one, and we have taken 2% price increase.
So my question is that since the all data points suggest that the crude is going to be slowing down and there are a lot of benefits which are going to come. So I just wanted to understand, how are you running the supply chain? Is that right now we are using this high price inventory and that's why you've taken 2%, or do you think you will have to take some more price increase for the products in the decorative?
So this price is something very recent phenomena towards the end of quarter, and generally there is a lag, because one that change in the crude should reflect in the derivatives, and thereafter obviously we carry some inventory, so there is a lag period. Having said that, when we are looking at the inflation, we are looking at in totality. Say last year there was high inflation, first quarter also there is inflation, and especially in industrial, whatever price increase we have taken last year, it was less in comparison to the inflation. So obviously more price increase would be required. In decorative, again, there may be some possibility of further price increase, small price increase, and then probably next 2-3 months when the picture would be clear, then we'll be able to see whether further is required or not required, but there is a possibility of further price increase as of now.
Okay, wonderful. On the industrial and auto, have you experienced any price increases we have got?
So when I said, last year we have taken in industrial about 18%, and when I say 2% price increase Q1, that is total. It includes industrial decorative, and price increase is relatively higher in industrial.
Okay, that's helpful. My last question that you did allude saying lot of initiatives you have taken, but just for the sake of monitoring, what are the top 2 or 3 things, because I'm sure you have done the strategy for next 3 years. What are the top 2-3 things you would like to achieve in say next 2-3 years?
So if you are talking about the initiatives, you are talking about the initiatives or what?
Yeah, initiatives.
So I think I spelled out, one is that business part, because in business there are 3 things: paint, putty, and new businesses. So obviously our first attempt is to see that in paint, that we are matching or better than the market growth, and for that the initiatives in terms of product, communication, and influencer. So that's the first priority. And putty will be waiting, whenever the right time, how we can increase the discount and match up the growth. And new businesses, as I said, that we'll be launching the product, but we are not looking at 100%. So the first priority is to get to the market and over the market in paint based on the initiatives of product, communication, and influencer.
So does this have the implication that you have any target that say certain percentage of the new product should contribute to your revenue?
Yes. For the new products, for the participation increase in painters, the extraction from the painters, those targets we have, and we are monitoring on a month-on-month basis.
Okay. That's really helpful. Thank you, Anuj, and all the best.
Thank you so much.
Thank you. The next question is from the line of Mihir from Nomura. Please go ahead.
Hi, sir. Good morning. Thank you for taking my question, and congrats on a good set of numbers. Mr. Jain, I just wanted to check with you, on the quarter, was there any restocking at the dealer end? As 4Q, we had seen relatively lower sales, so the dealers would have ideally have to, stock up in the first quarter. So any kind of a one-off or a restocking that is there in the numbers in the first quarter sales?
No. So what happens that when they stock less in the last quarter, generally the pickup happen in the first month of the quarter, which is April. But during the quarter, it gets stabilized.
Okay, so we are like normalized sales. So the run rate is normalized to these levels is what can be assumed. Yes. Got it. So secondly, I wanted to check, you mentioned, the mix had improved. So the volume growth should be much higher than 28-30% in my view, right? I mean, and what is the steady state mix impact that we should consider?
Steady state mix, so, in our mix, as I said earlier also, that what we are looking at this super premium category, and what we are watching is that there, because the growth in the market is better. Today also, after the inflation, we are seeing that in the premium category, as of now, market is still doing good, and maybe the impact is there on the consumers in the middle category or lower category. So super premium category, where our salience in relation to the market is lower, that is what we are targeting with the introduction of all these products. Because whatever products I spoke about, they are into the premium or super premium category.
Yeah. No, so I was actually referring to the difference between the volume and the value mix. Historically, the difference has been, earlier it used to be like 5%. In the recent years, it was like 7, 8, 9%. So the difference between the volume number and the value number is a mix impact that I was referring to. Given that this quarter had a better mix, the mix impact would be lower. So if you've grown your value by 47 and you have a pricing of 18, 19 or 20%, then your volume growth has to be far higher in my view. That is what I was referring to.
I don't know. See, what happens is that, as I said, that internally what we do, we look at paint separately, new business separately. So, if you see the last year, the price increase in decorative was about, say, 21%, and partly impact has come in the, say last year itself. So typically, if you see 16, 17%, a change should be there. And so the value and volume, the gap should be around 16 to 18% if you keep from the only price point of view. And if you're getting a higher growth than that, then it's a change because of mix.
Okay, I'll take this offline then. Sir, and on margins, I wanted to see, margins also due to a better mix, it would have, we've seen, much better than expected margin this quarter. So can one expect, margins to bottom out as, you've alluded to some certain structural changes in the portfolio. So this kind of a mix that we have seen in this quarter may not be, can it be the similar mix going forward? Or you think that there is a possibility of margins to kind of go down in the next quarter or so just because we've seen a better mix this time around?
So typically for the paint industry in the second quarter, which is July to September, the mix is different, because in this period more of a enamel, primer, distemper, lower end product sales happen. So generally we find that the mix for decorative especially in the second quarter is inferior to the first quarter, and then third quarter it becomes better. But some of the changes what I spoke about in the industrial, that could continue to work.
Got it. Great. Thank you so much for this and all the very best, sir.
Thank you so much.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Avi Mehta from Macquarie. Please go ahead.
Hello.
Hello.
Yeah. Hi, sir. Sir, I just had 3 questions. First, on the decorative side, are you concerned that this quarter probably saw one-time benefit from pent-up demand due to Omicron? And with inflation, with the fact what we're seeing globally, is there a possibility that growth should start to slow down? Is that a concern that you would be worried about?
No, I'm not very sure about the pent-up demand, because you can say that in the first quarter the growth is higher because last year May base was very low. Because last year May there was a COVID impact, the base was very low. And now because it is normal market, so it is normalized. So to that extent, obviously the growth of the first quarter is higher because of the low base. Now from this quarter onward, it's a normal market growth. So generally we have seen that paint industry has been growing in the range of double digit or maybe a bigger single digit growth volume. So I think that trend we feel that should continue. Only additional factor this time could be, because last 2 years the Diwali was there in the month of November, this time Diwali is in the month of October. So generally paint industry get benefit if there is a longer Diwali period, pre-Diwali period. This time it is a little shorter. So we have to see the impact of that.
Okay, sir. Okay. And the second part, sir, was I just wanted to kind of, revisit that answer that you said on the pricing. If I look at current input cost levels, would you say that the incremental price hike, not just in decorative but also in industrial, will be, relatively low? The amount required will be much lower than what has already been taken, as in the bulk of the price hikes are now behind us?
In industrial, we feel that we need more price increase. Because last year inflation was there, and I think we got maybe just 40-50% of that, 50% of the price increase, of the inflation. So some more price increase definitely is required, for us to better our margins.
Okay, sir. Okay. And sir, lastly, you did allude towards a focus on more premium, more technology-based products, not just in decorative, but also in our industrial portfolio. Does that have any impact on the royalty rate that we pay?
No impact.
So the royalty is essentially paid only on the products that are directly taken from, only in the industrial side, right, sir? I just wanted to clarify that part.
It's only on automotive on selected products.
Perfect, sir. That's all from my side. Thank you very much, sir. Thank you.
Thank you. Next question is from the line of Aditya Ahluwalia from Invesco. Please go ahead.
Hi. Thank you for the opportunity.
Thank you.
My first question is on A&P spends, and from a longer-term perspective, do you think that we have been a little cautious and we have not spent enough, and that is one of the reasons why performance in the past has been a little bit below peers? And secondly, what is the outlook on the A&P spends going ahead?
So, we do agree that last few years that we reduced our expenditure and we got impacted because of that. And now we have taken a conscious call that we'll be increasing our marketing expenditure.
So as a percentage of sales, is there anything that we're calling out?
So I don't want to share the figure, but as I said that, if you see last 2-3 years when we reduced our marketing expenditure, our share of voice in terms of visibility has gone down substantially, significantly. Now we are saying maybe around 14-15% share of voice at least will be maintaining, even if the market intensity change, which means that if market intensity goes up because when the new competition is there, so you'll maintain. So if the market intensity goes up, this figure also will go up.
Right. But the margins have come off despite this lower A&P, I think because of the industrial and auto segment. So you think that even with the higher A&P, the recovery, as you mentioned in the previous question, there should be continuous improvement in margins going forward?
Yeah, because as we discussed about this premium, super premium, the Paint Plus products, and that's why the focus is more there. That because when we are going to increase our A&P expenditure and there are certain other initiatives required, so we have to focus on the better mix so that we are able to balance it out.
Thank you. And just one last one. You said 55-45, the mix between decorative and auto and industrial?
Yes.
But it should be more like 65-35 now, right? Given that auto has been declining and
No. 55-35, 55-45, closer to that.
55 and 45. Okay. Thank you very much.
Thank you. Next question is from the line of KU from ICICI Prudential. Please go ahead.
Thanks for the opportunity. Just want to understand that in the context of, say, as you mentioned that we exited some of the low margin businesses on the industrial side. At the same time, we are witnessing, say, some slowdown in the input prices also. So these two inputs logically says that there should be a sequential margin improvement on the industrial side. And since we exited some of the business, so how should we see a balance between the growth in the industrial side and the margins going ahead? Any run rate range or any qualitative color you would like to share on that aspect?
So two parts. One, that growth obviously in industrial automotive side, there is a momentum in the growth. The production growth is looking up. Two-wheelers, where the last year production growth of two-wheeler manufacturers were negative, now it is into the positive area, but it's still not back to the pre-COVID level. But with the good monsoon, there may be a possibility that after September, there may be a further pickup of two-wheeler. But we do see a good momentum to continue for the automotive demand. For margins, as we discussed earlier also, because margins have gone so low, and obviously therefore there is an intent requirement to increase the margin, for which one is the price increase, the other some of the initiative which I mentioned. Those initiatives are taken to get it to a reasonable level. Margins to be improved, but as a strategy, what is happening in the market, some of the investments are also required. So as we keep working on our margin improvement and then see that when it become more viable to do more initiative, so it will be a mix and match of both the things.
Okay, but when you exited the businesses, some of the businesses, that won't have impact on the growth or earnings growth since they were not profitable.
We are going a little conscious on that, in terms of if you are saying top line growth, obviously when you exit some business, there will be some impact. But the focus is shifted from that low profitable product to the better profitable product. So over a period of time, we intend to compensate that. So that is what we are doing.
Okay. Sir, congratulations on good results and thanks a lot and all the best for the future. Thank you.
Thank you for the compliments.
Thank you. Next question is from the line of Arun Subramanian from Ampersand Capital. Please go ahead.
Yeah. Hi, sir. Congratulations once again for a good recovery in quarter one. One thing just wanted to get clarification from you is that you said you are more present in smaller towns than in tier one, and that has kind of affected your market share trend in recent times. So can you just give us a more granular sense of how is your split, and secondly, what exactly you are looking forward to in terms of the change in next couple of years?
Just to give you some rough example, like, if you see local towns versus upcountry town. When I say local town, wherever we have the depot office, they are mostly the A-class town. Our business would be little less than 40% from the local towns and more than 60% from the upcountry towns. While in terms of market split, it would be 50-50 or maybe more tilted towards the local towns. So to that extent, we have a disadvantage. And all these big towns, some of these things what I mentioned in terms of service and other initiative project, because project business, institutional business is growing more in this local towns or the bigger towns. So some of these initiative over a period of 2 years should help us.
Understood. And considering that you are launching your products on a more premium side, so that typically should be used up in bigger towns. So is your product strategy aligned to what you are looking at?
Yes, it is aligned. Because there are two things. One, that premium, super premium category, but some of the differentiated products, the features what we are launching, we are trying to see that pricing is relatively affordable. I'm just saying that if the same feature is available, so that's a democratization of the product. That is the same feature is available in the market at 100 rupees, whether you can make it available at 90 rupees, and that's a technology working which we are doing without impacting the margin. But how do you formulate the product where that feature can be offered? So some of these products goes very well in the urban markets or say local market, but some of these products are also quite aligned with the requirement of the upcountry markets.
Understood. So they can see that your strategy as far as industrial is pretty clear, and you're doing pretty okay out there, except for this pricing volatility. Whereas in last couple of years, because of whatever reason, you have been a little bit reactive in the decorative space, and which probably has resulted in market share loss. So can we say that now that phase is behind us, and you will be doing much better in terms of your decorative?
So I want to comment like this, that yes, we lost and we had our action plan and strategy, some of the things what I mentioned also. But let me accept it that market has become competitive, and in the paint, earlier paint was simple, because it was only paint. Now there are so many elements. There is a putty which was not there in the past, which is a lot of new businesses. So, comparison going forward will become very difficult. Internally, what we are doing is that, our core business is paint. Now, in the waterproofing, in the construction chemical, whatever products which are becoming a part of the integral part of the paint, those products we are launching. So internally, we are quite focused on the paint and see that, we make progress, and some of the point what I mentioned, given a, inputs about the Q1, there is a progress, upward progress we are making. But suppose tomorrow there are, other new products are coming up, which may not be planning. I'm saying other new product in new businesses, which may not be planning. So then comparison, with the industry peers will become very difficult.
And do you have the advantage or disadvantage of having a Japanese parent in this particular aspect which you were talking about?
We have a big advantage, because when you talk about the technology and the process, I think that they add so much of value to us, and they are very supportive. So we are definitely doing all these things in consultation with that, and we are very happy that with their inputs.
Even in adjacent products.
Yes. Okay. Because our parent Kansai Paint, they also have a lot of subsidiaries in many markets. So we have advantage in terms of getting access to that what kind of product, even in this adjacent categories, that what kind of trends. So those inputs are there, and through the Kansai Paint Japan or through their subsidiaries, we are able to get the access to the know-how, technology, product trends, marketing trends.
Understood. Thanks a lot, sir, and all the best.
Thank you.
Thank you. Next question is from the line of Ajay Thakur from Anand Rathi. Please go ahead.
Hi, sir. I had a few questions. First was, can you just elaborate on your distribution reach in the decorative paint segment, what would be your distribution reach? And how much distribution touch points you would have added, say, in the last quarter and last year, maybe?
So last year, our reach was around 27 to 28,000 total dealers when we ended the year. And generally, the growth in last 2-3 years has been, last year probably it was around 7-8%. In the COVID year, the growth was very less. And in the quarter one, the distribution has increased in the double digit, little higher double digit. So there's an improvement there.
Okay. And you continue with the same pace of distribution addition, like around 7 to 8% or around 10%, or you think there's much more headroom to grow, given the fact that leader is present more like in 1 lakh plus kind of outlet?
We have a good opportunity available, good headroom. As of now, the numbers have gone up, and some of the activities, because typically what happens is that you have to create demand and confidence in the trade. And as it goes up, then your numbers of the distribution. So that's like outcome. So all the activities, the product, influencer activities, what I spoke about, as we get success in that, I think our momentum in terms of increasing our reach will go up, should go up.
Okay. Secondly was wanting to check on the competition front. Can you just give us some brief color on how the competition is actually shaping, given the fact that we have new players coming in? Also, where are this competition more kind of concentrated? Is it some kind of a geographical region where we are seeing more competition from these players, or is it like they are broad based across India, that we are seeing that new player where the competition actually has erupted?
So companies who have already entered in last 2-3 years, they have already have had now having a presence across the country. Some of the companies who have entered in last few years, and specifically if you talk about Grasim, who is going to enter in next 1-2 years, I think their plan, whatever is available in the public domain, they are also planning to be all India player. But it may start with some specific market, and over a period of time, I think they will become an all India player.
Okay. And lastly, on the industry growth in the paint segment, any colors for this quarter, how it would be, given that we have very high number actually coming from most of the players. So any sense or color on that front could help.
Sorry, I didn't understand the question. Industry growth, you are saying?
About industry growth in terms of the paint segment for both the industrial paints and the decorative paint segment.
For quarter one, you are saying?
Yes, for Q1.
So because many of the companies are yet to come out with the results, so as of now, we would not like to comment on that. Only once the results are out, then probably we'll have a better understanding.
Okay, quite helpful. Thanks, sir.
Thank you.
Thank you. Next question is from the line of Ankit Sethi from ICICI Securities. Please go ahead.
Hi, sir. Thanks for the opportunity. My first question is on the project business. So this was not a focus for some of the players earlier, say 4 to 5 years back. But now even the market leader and you have been seeing strong traction in it. So can you discuss the changes in terms of attractiveness of that business for you to focus more on it?
So in the past we were not very focused, because how many directions you want to go and how do you spread your the wings. But I think today the growth in certain market and the project business, because it's penetrating in more and more cities, the number of cities are getting expanded. So virtually I can say there's no choice. It is important to remain in this particular business. The discount in this business is higher, and therefore the margins are lower. The only thing is that this business is more of emulsions and putty, probably enamel distemper is not much there. So to that extent, some mixed advantage, but overall the margins are lower in the project business.
Okay, got it. Second, on a broad basis, what would be the margin difference between your deco and industrial segments? And the bridging, between the two will be more price-led, which you were alluding, some time before, or will be done through more of new launches in the industrial segment?
Prashant, you want to answer this question?
So the difference at EBITDA level is in the range of 7 to 8%, more than that, actually difference with decorative and industrial. And the improvement in margins will happen from introduction of new products and technologically superior products.
And also the price increase.
And price increase.
The difference is quite large now in decorative and industrial. And so these are few of the actions, which will probably see that whatever amount can be bridged, 100% it cannot be bridged.
Understood. And lastly, if you can highlight the capacity utilization for the two segments and what would be your CapEx requirements. That's it. Thank you.
65% was the capacity utilization in the quarter one, and we announced some capacity extension just to support the growth objectives what we have.
How should we model the capex for the next 2 years?
So right now you must have seen we have actually approved 2 projects, both in decorative. For industrial and automotive, we have capacity for the next 2-3 years. So as and when required, we'll definitely expand because we have got infrastructure for brownfield expansion both for industrial production. So that is not a concern at all. And as far as decorative is concerned, the commissioning is not as large as industrial, so we'll be able to scale up at any point of time. So there's no problem on capacity.
So these 2 new projects what we have announced will happen over a period of next 25 to 30 months. And that's an investment of how much?
290 crores.
90 crores what we have announced. So 290 crores plus your regular capex for the year.
Okay, fine. Got it, sir. Thank you so much. Thanks a lot.
Thank you.
Thank you. Next question is from the line of Farsi Pantaki from IIFL. Please go ahead.
Hi, sir. Congrats on a good set of numbers. Just trying to understand your margins. So this quarter has been a significant jump from 7% in Q4 to about 13% in Q1. And large part of it is because of the operating leverage of the higher QOQ sales. There is also some amount of improvement in gross margin, but our gross margins are still significantly below historic average. So just looking into the future for a few quarters, how do we sort of build in the margins, assuming that the input costs stay where they are? You already got some benefit from premiumization. You already taken price increases. Maybe a little more will come in the auto segment. So shall we say that this 13% margin will now stabilize in the range of about 14 to 15 unless the input costs fall further? Is that a fair assessment?
Overall year basis and quarter basis there is a difference, because every quarter there is a change in the business mix and the product mix. As I just mentioned little while back that in the coming quarter for the paint industry the mix is supposed to be inferior, because it is more towards enamel distemper. So that also will affect. And also as I said that some of the activities what we are working upon this will help in the margin improvement. But we do have some of the points which are pending in our strategy where, as I said, in some of the areas where we are still restricting, because as of now, when you want to get a profitable growth, you have to balance it out. So as we improve margin in certain areas and we find that our capacity to spend on those areas goes up, so that also would happen. So it will be a mix and match of that. So difficult to give you answer, but yeah, last year also we said that our margins are already the lower side. So I think we have improved, we will continue to improve, but improvement and investment will go hand in hand to see that we are able to balance between the top line and the bottom line.
So as you mentioned, there is a seasonality because of product mix being different. So if I basically look at this point of product mix difference between quarter to quarter, Q1 margins versus the full year margins, they would be higher or lower in a normal year?
Actually, I don't want to talk about that, but as I said that I think we have improved, we will improve, but then there are certain expenditure, investment also would be required. So I leave it to your guess, but maybe closer to this.
Sir, I'm not asking for guidance for this year or next year. I'm just saying in the past, historically speaking, the product mix impact has been sort of highest in which quarter, in terms of which quarter has the best product mix and which quarter has the worst product mix. That's all I want to know.
So the product mix is better in Q1 and Q3.
Okay. Understood, sir. That's all from me. Thanks and all the best.
Thank you.
Thank you. The next question is from the line of Archit Joshi from B&K Securities. Please go ahead.
Thank you, sir, and congrats on a good set of numbers. Sir, my question is related to the industrial paint segment. You had mentioned in the presentation last quarter that the KNPL is a key player in the electric vehicle segment, and you've also mentioned that we have strategized a 3-year plan in terms of having a strategy built around the paints division that we have on the industrial side. Can you elaborate a bit more on what the strategy is and how we will be able to leverage our parents' products in the EV side? Any broad color on that would be helpful. Thank you.
By and large, what we said is now since there is a trend of electrical vehicles, as of now the percentage is very low, but over a period of time, this percentage will increase. So the product, the system, what is required is available with us. And most of the customers who are, because in the electrical vehicles now, there are existing players who are, in the traditional two-wheeler business where they have their paint shop, but the new players are getting it painting, outside. So those are like ancillaries, and they are also our customers. So our customer base is good, the product is readily available. So as and when this scale-up happens, that we are there, we are available with our service, with our product like that. So this is related to EV if your question is only specific to electrical vehicles.
Sir, not just EV, but if you can elaborate a bit more and on what we actually are strategizing with respect to growing on the industry side, if you can.
Yeah. So industrial, because our this automotive market share is high, and there in fact, we have a very strong market share in Japanese players, and today there is a good growth happening in the Indian players also, the PV manufacturers. So there we are going aggressive, and we are working on the technology. There was a question earlier, the help from our parents. So there are a lot of technology advantage, which we have in this industry, which is like, for example, in 2008 we introduced 3-coat 1-bake. Now, for the baking also there is a particular temperature. Now we are working on keep reducing the temperature so that the energy consumption keep going down at the customer end. That helps in terms of cost, that helps in terms of environment, that also helps in terms of increasing the productivity. So all those areas we are working to keep our moat or competitive advantage in the automotive. The second part is auto refinish, where our market share is very low, less than 5%. The size of the market is good, and there, the margins are better. So we are working to see that, how do we increase our salience of auto refinish, because that will also help us increasing the margin in the auto. And the non-industrial areas, as I said, that our focus is completely shifting, not completely, but largely shifting from the low end to the high end. And therefore we have created our structure and getting into the approvals, and fortunately we are getting good approvals. So these are the actions so that that we are able to make our good place in the areas which are growing and which are profitably growing.
Understood, sir. Thanks.
Thank you.
All the best.
Thank you.
Thank you. Next question is from the line of Sanjay Kumar from iThought PMS. Please go ahead.
Hi, sir. Thanks for the opportunity and congratulations on a good set of numbers.
Thank you.
First question on the A&P spends. Few years ago we increased our A&P spends, say in FY18-19, saying that first you increase the mind share and then you convert the mind share to market share, which we weren't able to do in FY21-22. Now that you want to know you will increase your A&P spends again, what would be the strategy going forward in dealer network? Because the largest player, I think they have doubled, or at least they've increased their retail touch points. That might not exactly be dealers, but they've increased it by 50%. And next 2 years, say we increase our A&P spends, and by then Grasim would have entered the market in decorative. So what would be our strategy going forward in distribution and specifically the dealer network?
So in those years when we increase our marketing expenditure, our focus was more in terms of enhancing the mind share, and we got advantage. I think 3 years we gained market share in that period. And when you are saying that converting the mind share to the market share, that opportunity happens from the dealers and the influencers. So I think most of the activities, what we are talking about, the marketing activities, the influencer activities in that particular direction. So one side you have to maintain your salience. That's why we are not talking very aggressive in terms of share of voice. Maintain share of voice so that you are able to maintain your mind share, which is strong number 2 as of now, and concentrate on the activities that basically convert the mind share to the business, to the market share. So that is first part. When you talk about the new competition, I think it's because generally what happens is in this market, ultimately for good business you have to create a good distribution and you have to create a good demand, for which important is that you should have a brand, which we have, and then you have to create the distribution and support the distribution with the painter, and that's hard activities which people will have to do. So I think we have an advantage there that when any new company comes in, I think they have to do this activity to build the distribution and to build the contacts with the influencer. It takes its own time. So by that particular time, how much work we are doing, how do we expand, I think that would be more. We will be more focused on that how do we speed up all these things and get the advantage.
So, my concern was on the growth rate. Say the Asian Paints is growing at 20-25% CAGR in its retail touch point, but we are guiding for 7-8% or early double digits. So I see this divergence. So is that something to be worried about, or we'll change that going forward?
But it's that's what I'm saying, that earlier, probably in the earlier years, it was very simple because paint versus paint. Now it is not paint. There's so many things which are getting added. There are so many businesses. So, I don't think, because ultimately we have to work in, see that, how our home is rather of, that just chasing. So there would be many products which probably fits into their strategy but does not fit into our strategy. So as I said earlier, that focus remain on the paint and the integral part of the paint. So that is what we would be seeing. And over a period of time, then if there are some other products where the market is created, because typically in any industry it happens that, if there are new categories coming in, so leader takes the initiative and they create the market, and if that market is lucrative, maybe one can decide whether you want to participate. But at this stage, I think it is focus for us to see that in the paint area, which has been our core business, and whatever weaknesses we have had in the past, we come out of it. That is our focus area.
Okay, sir. Thank you. And second, on capital allocation. So you said that our util is at 65%, and we are putting up capex in decorators, which will take 24 to 30 months. That's also the time graphene will take to come to the market. So there will be a lot of supply coming in the decorative space. So wouldn't it make sense for us to get aggressive in industrial space and put up new capex there rather than decoratives where there is a lot of competition coming in? Just wanted your thoughts on that.
So industrial, in fact, we have already created a capacity in Saika, and there is a lot of scope for brownfield expansion is there. And as and when whatever demand we are able to foresee, I think we are covered in terms of the capacity. We are fully covered up because that's our one core area, and we are fully covered up. In fact, in last 2 years, we have created a dedicated capacity for non-industrial, non-automotive industrial things also. So we are fully covered up there. And this capacity, what we are adding is mainly in the water-based, because water-based, generally the market growth also is double digit, if you see last 3 years, 4 years, and that will continue. So, even if you see the normal growth rate, so obviously we do this calculation when you want to expand your capacity, that what is the normal growth rate, what can go plus minus, and then, based on that calculation, we feel that capacity is required. And as I said that, we are committed to this decorative business also based on whatever initiatives we are taking, and as the time demands, probably, whatever changes are required to be, done in that, and therefore to support that, this capacity expansion is required.
Okay. And given the competition in decoratives, are we seeing higher aggression from, say, players who are in industrial, like Axo or Berger, getting aggressive in industrial space, or?
Difficult to comment upon, maybe possible, but I think industrial is a core business, and some of the things that I spoke about, I think we are also planning to go, you can say aggressive, because there are opportunities in the non-automotive area where I said that this segment by segment. The only thing is that yes, we want to remain focused on the profitable segment rather of the lower profitable segment, because in the decorative market, when the competition intensity goes up, there may be a possibility that the margin structure may change, and that time that if we are able to build our business in the industrial in the better profitable segment, I think we'll be able to balance it out.
Okay, so that's it from my side. Thanks a lot.
Thank you.
Thank you very much. Ladies and gentlemen, the next question is from the line of Jaykumar Doshi from Kotak. Please go ahead.
Hi, thanks for the opportunity. Am I audible?
Hi, thank you.
Hi, am I audible? Hello?
Yes.
Okay. Hi, thank you. My first question is, Kansai Japan, in their presentation, in the month of May, have given a guidance of 18% growth for the India business, revenue growth. And if I were to look at this quarter's performance and based on, assume certain growth for the rest of the year, it seems that you should be able to grow 20% plus in revenue terms. So can you please help us understand, what goes into the guidance and forecast of the parent when they guide for the India business?
Krishnan, do you want to answer this question?
See, generally we don't give any guidance going forward. We don't make any forward-looking statements. So generally, you are a better person to judge how the industry is moving, right? And the growth is happening. We believe the growth going forward, growth is good, but we will not make any statement of any percentage increase or something. So we will move in line or slightly better than the paint industry. That's what I can say.